Who is the most watched investor on Wall Street today? The answer, Cathie Wood, founder and CEO of the investment management firm ARK Invest. Hello, and welcome to the HedgeBee Explained series. In this series, we will dive deep into the strategies of the most legendary funds on Wall Street and decode their secrets to success. We begin with ARK Invest. In 2020, as the COVID-19 pandemic was battering the market with uncertainty, ARK Invest, also known as the ARK Fund, attracted the attention and enthusiasm of many investors with its consistent and robust performance. By the end of 2020, its 5 active funds posted returns exceeding 140%, earning it the distinction of top performing fund compared to over 2,400 other ETFs. The fund's spectacular growth is deeply tied to the leadership and philosophy of its 65-year-old founder, Cathie Wood. How has she imprinted her beliefs into the DNA of this highly successful fund? Now, before founding the ARK Fund in 2014, Cathie Wood was the Chief Investment Officer of AllianceBernstein's Global Thematic Fund. Over the last 2 decades, passive funds that track index stocks have become popular, and active funds like the Global Thematic Fund that rely on fund managers to judge stock selection have lost their allure. Cathie Wood's proactive investment philosophy of investing in disruptive companies was not fully supported by her colleagues, so sensing shifts in investor opinion, she left AllianceBernstein in 2014 and founded the ARK Fund. The main thread stitching together Cathie Wood's philosophy is this: to bet on industry change by committing to discovering and supporting technology growth stocks. The key, entering the market when the company has evolved out of its initial dangerous period and is beginning to embrace the prospect of rapid development. Without exception, ARK's 8 funds are invested in the field of disruptive innovation, ranging from the ARKQ Independent Technology and Robot ETF to the ARKX Space Exploration Innovation ETF. After facing a sharp correction due to the pandemic in 2020, the ARK Fund focused on companies that could alter consumer behavior, betting on the medical and health industries in particular. Cathie Wood also projects significant optimism about the disruptive potential of Tesla, believing that Tesla stock could rise to $3,000 per share by 2025, a 320% increase from today. However, we cannot underestimate the risks faced by Cathie Wood's disruptive strategy. Her risk appetite and timing of entry means that ARK Fund has a higher systemic risk index than most passive funds. Her venture capital style investment strategy is often viewed as controversial. By the end of 2020, the ARK Fund owned at least 10% of the shares for 24 companies. A 10% shareholding threshold means that existing investors become shareholders participating in the management of the company. For general funds, especially ETFs or public offering funds, 3% of a portfolio shareholding is high enough. At the same time, most of ARK's top 20 positions are still at a loss. If the market experiences a liquidity crisis or interest rates rise sharply, these growth stocks are often face a collective decline, which means that ARK's risk diversification for customers is limited. Therefore, during the market correction, especially at the start of 2021, technology stocks were under pressure, and the ARK Fund was hit hard. Since February, as the yield on the 10-year U.S. Treasury bond rebounded, technology stocks and innovation stocks adjusted. ARK experienced a retracement of up to 30% by March. Thus, ARK became a short-selling target for many institutions. More than 20 institutions, including Blackstone, bought many ARK put options in the first quarter. Wall Street believes that ARK is an option for hedging market declines in addition to shorting the index, and is viewed as an especially excellent choice for countering declines in tech stock. Generally, hedge funds are unwilling to expose their positions, fearing that they will be targeted by their counterparts. They are also quite comfortable to provide services to institutions and the rich on what Cathie calls, quote, the island of Wall Street. But why did Cathie Wood jump out and establish an active ETF fund? In the current market, the scale of active ETFs is very small, and is not comparable to the number of passive ETFs that track the broader market. Starkly aware of this dynamic, Cathie Wood is determined to break the isolated island of Wall Street, reinvigorating the role of active ETFs and making professional investment services available to the middle class and retail investors. She is already making a dent. There are currently 600 active ETFs in the United States, with about 260 billion assets under management for actively managed funds, of which Cathie's funds account for about 20% of that market share. Cathie Wood also seeks to bring transparency to strategies that the professional investor class have historically guarded. As part of this initiative, ARK publishes internal research reports for free, including a daily publishing of its own transaction log. discusses investment targets with professionals on social platforms such as Twitter and Facebook, and hosts monthly public seminars with ARK analysts. Cathie Wood's popular YouTube series, Stay at Home with Cathie, demystifies the investing world through punchy, informative videos designed for the retail consumer. These methods allow professionals in many fields to exchange views on ARK and achieve the purpose of crowdfunding research. At the same time, it is a creative marketing strategy. This net celebrity effect means more investors have been exposed to ARK and its products, which will help increase the scale of asset management. All in all, Cathie wants to break away from the isolated island of Wall Street, reshape the future of financial services, and give retail investors greater access to the services of professional investors through active ETFs. However, these ambitions rely on ARK's continued strong performance. Now, there are no